BlackRock is the largest asset management company in the world, and it recently submitted an application to create a spot Bitcoin ETF. If approved, it could usher in massive capital inflows into the cryptocurrency industry and maybe just what we need to kickstart our next bull run. But approval is not guaranteed. Just ask any of the other asset managers that have unsuccessfully filled spot Bitcoin ETF applications with the SEC. This video will attempt to answer the question of whether this time is different. So keep watching to get our best guess at whether BlackRock's ETF will be approved. History is not on our side. Let's start by considering the factors that are working against approval. The primary one is that several reputable asset management firms have already tried filing similar ETF applications with the SEC and were denied. That list includes Van Eck, Grayscale, and Cathie Wood's ARK. So right away we see that something needs to be different about this application in order for it to get approved. That's especially true given the SEC's recent heel turn on crypto. Chairman Gensler has sued Binance and Coinbase and named some of the most popular crypto assets securities. This makes it seem unlikely that the organization he heads would simply approve a crypto-friendly ETF. But the good news is that there's reason for optimism. BlackRock is different. Perhaps the most bullish sign for BlackRock's Spot Bitcoin ETF being approved is its track record on ETF applications. The firm has applied to start 576 ETFs in its history and has been approved for 575 of them. That means it would be extremely out of character for the SEC to deny this ETF application. The reasons for this strong approval record aren't immediately obvious, but our guess is that it has something to do with the fact that BlackRock is the largest asset manager on the planet, and it has the capital to make the SEC's life very difficult if it decided to do so. This doesn't guarantee that BlackRock's Spot Bitcoin ETF will be approved, but it's definitely a sign pointing in that direction. A unique clause. BlackRock's ETF application also has a unique clause that's worth referencing. The ETF includes a surveillance sharing agreement with Nasdaq. This basically means that Nasdaq will receive all of the market data that BlackRock gets while running this potential spot Bitcoin ETF. The reason why that matters is that it gives the SEC a higher level of confidence that BlackRock and its partners won't try to manipulate the Bitcoin market and potentially harm consumers. If the Nasdaq has all of BlackRock's proprietary data for this Bitcoin ETF, it can act as a watchdog to help keep retail investors safe. This kind of clause could be exactly what the SEC has been looking for. Or, at the very least, it gives the organization a great cover story for potentially approving this spot Bitcoin ETF when it denied others in the past. It can point to the clause as a differentiating factor to avoid legal challenges from other firms. Will the BlackRock Spot Bitcoin ETF get approved? So with all that being said, the question still remains. Will the BlackRock Spot Bitcoin ETF be approved or not? The answer is impossible to predict with any degree of certainty, but this is definitely the most promising spot Bitcoin ETF application that we've seen. BlackRock's status as the largest asset manager in the world, its historic approval rate on ETF applications, and the company's inclusion of the unique surveillance clause are all factors working in approval's favor. The SEC could always surprise by declining the ETF, but most crypto enthusiasts have a higher degree of optimism about this potential ETF than they have about any other in the past. And that may be a good place to leave it. What do you think about BlackRock's Spot Bitcoin ETF application? Will the SEC approve it? Or are we due for another disappointment? And how do you think it'll impact your investments moving forward? Comment your answer below to let us know. And don't forget to like and subscribe to see more videos like this in your feed moving forward. Thanks for watching another edition of the Metaverse Memo. Until next time.